the one everyone gets really excited about, right?
Correct. It's the biggest one.
So it's the biggest one. Tell me about the earning credit. Who qualifies? What is it? I mean, do people forget to put it on their tax returns? What's going on?
So the earned income credit, also known to many people as the low income credit.
Low income.
Right? Usually families have to be under 60,000
Right.
to fall into what I call the bell shape, right? You make nothing, you get nothing. But as you make more, the credit goes up. And when you make too much, the credit goes back down, right? That earned income credit is based on your earned income,
Right.
being a W-2 employee or self-employed. And you get the credit. If you're a single individual, you get some, right? Not much. It maxes out at about $605.
So single individuals get a
They
little bit.
get a little bit if you're low income. But when children are involved, it skyrockets, right?
Money, 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 money.
Pretty much.
Welcome to Chisme with Andy, your favorite tax podcast. Don't forget, tax season is upon us and we're about to start. If you have any questions regarding your taxes or bookkeeping or accounting or whatever, please hit the link below. Ask us any question you have so we can, figure it out. We can answer your questions. And let's start. All right, Victor, our guy, our man, the guy that knows everything about taxes, the guru, he's here with us again. And it's January. Tax season's here. Let's talk a little bit about credits and deductions and let's talk about the fun stuff. Let's talk about getting people money. People love money, right? Love money. So big refunds, everyone gets excited. We're not talking about people that have to pay. We're talking about the refund people today. What is the most common credit that you see that people, that are probably eligible? And we're talking to people, most people, the average person.
Got it. So the first one I would say is not really a credit. It's more a deduction, aka the standard deduction, right? Only very few non-residents and foreigners don't get it, but almost everyone else gets the standard deduction, right? Which means that first part you get to deduct off your income and you have a zero income tax on it.
Okay, so almost everyone gets the standard deduction.
Correct.
Except people that are non-resident.
Non-residents or filing a non-resident return or foreigners.
Yeah, but a foreigner living in the U.S. would be considered
Then they're a resident of the U.S. at that point.
Okay,
correct. And the standard deduction for 2024 income tax season is $14,600 if you're single, double $29,200 if you're married filing jointly.
Almost 30,000. So
Almost.
it's 15, 30,000.
Very easy. Head of household is $21,900 as far as that goes. And obviously for the people doing married filing separately, it's the same as single. Your
So
tax separate.
what you're saying is that everyone gets this deduction.
Correct.
Single, married, head of household, everyone's going to get this deduction.
Correct.
This deduction will then make people not have to pay taxes.
Correct. So
it's not like money you get back.
No. It just reduces the income tax. So then the taxes they took out during the year, you get more of that back.
So let's say a married couple makes $30,000. That means that everything they took from the federal taxes, right?
They're almost going to get everything
They're
back.
going to get that back, right?
Correct.
But we're not including all the other little items on your payroll, right? It's a Social Security, Medicare. It's just federal income tax, federal withholding, and state withholding.
Correct.
Some states don't have taxes, so don't have to worry about that. But the taxes that do, New York, California, we're talking to you guys. Okay, so now that we spoke about standard deductions, that's the one everyone gets. Let's talk about another credit that is also claimed. We'll deal with the parents now. What are the credits that parents receive? Tell us which ones they are.
So for children, which most people claim dependents, which are their children, there's the child tax credit.
Child tax credit.
And you could possibly also get the earned income credit.
The earned income credit.
Correct.
So those are two credits that parents get.
Correct.
They love this credit.
Oh, definitely.
They love this credit. Okay, so tell me about the earned income credit, because this is the one everyone gets really excited about, right?
Correct. It's the biggest one.
So it's the biggest one. Tell me about the earning credit. Who qualifies? What is it? I mean, do people forget to put it on their tax returns? What's going on?
So the earned income credit, also known to many people as the low income credit.
Low income.
Right? Usually families have to be under 60,000
Right.
to fall into what I call the bell shape, right? You make nothing, you get nothing. But as you make more, the credit goes up. And when you make too much, the credit goes back down, right? That earned income credit is based on your earned income,
Right.
being a W-2 employee or self-employed. And you get the credit. If you're a single individual, you get some, right? Not much. It maxes out at about $605.
So single individuals get a
They
little bit.
get a little bit if you're low income. But when children are involved, it skyrockets, right?
Money, 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 money.
Pretty much. From one kid, the credit can go up to close to over $4,500.
Okay.
And then up to 3 kids, which is the max
Right.
you can get the earned income credit for, it goes to like $7,700.
So like almost $8,000.
Yes.
So you got 3 kids, you make the right amount of money, you're going to get this one massive credit, $8,000.
Correct.
Everyone get the 8,000 or how does that work? How does that 8,000? You have to make the right amount of money.
Correct. So it's based on your income. Now, if your income is low, your income tax is also low.
Right.
So then the credit could pay off whatever's left over, and whatever's left goes to your refund.
So let's say they pay 0 taxes, whatever's left over, they get it.
Correct.
That's awesome.
Yep.
That's great. So family of 2 parents, they make $40,000, pretty good damn credit, right? Boom. Boom. Awesome. Now tell me a little bit about the child tax credit.
So child tax credit, qualification for income needs to start going up because the credit's very linear, and it starts dissipating for single individuals over 200,000, married couples over 400,000. But as long as the kid is under 17, 0 to 16 before the end of the year,
0 to 16.
and they have a social security number,
Okay.
you can get a credit up to $2,000 per kid.
2 kids. So let's go back to the same couple. We got mom and dad, both have socials. Children, let's say they're both 10 and 5. You're going to get the earned income credit for like, I don't know, let's say $5,000, right? And then you get an additional $2,000 per kid. That's $4,000. So you're saying that family is going to get a $9,000 credit plus whatever they took from their check? Is that what you're telling me?
Correct.
So potentially their refunds could be $12,000, $13,000, I'm assuming.
Depending on the withholding, yes.
Yeah, depending on how much they took from the check. Correct. So, I mean, people are probably coming into the office, getting massive amount of money. And so tell us, what do they spend this money on?
Debt.
Is that what it is? That normally?
Christmas debt.
Oh, Christmas debt. That's normally what
They run their credit card for the Christmas presents.
Number
and then
one.
they pay off the credit card. If there's anything left over, they go on vacation.
We'll go on vacation. I've seen people buy big screen TVs. Oh, down payment on the car.
Actually, one of my other clients likes tax season because when clients get their refunds, they go to a store to buy beds and furniture and all
furniture. Ah, we have that furniture client. Yeah. So he says tax season is great because clients come and buy furniture. Yeah. All right, cool. That sounds good. So these are great credits: earning credit, child tax credit. To go back about the earning credit, have you noticed that people that file their own taxes miss this credit completely? Can you explain that? Why that happens?
So yeah, if they're doing their own taxes on a tax software like TurboTax or something like that, there is EITC questions, meaning questions to qualify for the earned income credit. And if they're not answered correctly, you can totally miss this big humongous credit. And then, we've seen a client come in, we look at their tax returns like, why is this credit missing when you only made $30,000 and you have 2 kids? And they're like, oh, I did it myself. And now they're missing it because they didn't answer the questions correctly. They probably answered something like, are you a U.S. resident? And they took it as a U.S. citizen, so they put no. And now they don't qualify for the credit.
So yeah, be careful how you fill out the questions. If not, go to a tax professional so that you can maximize your credits. Victor, tell me 2 or 3 more credits to just wrap this up. Things that people are not claiming, people that should be claiming, so they can go to that furniture store and buy some more furniture.
A big one would be college credits.
College credits?
People start making more money, or
those are good.
School's expensive. They're paying with loans and credit cards, all that. So there's a tuition statement form. If it's reported correctly, you can claim American Opportunity Credit.
That's nice.
Which can raise your refund about an extra $2,500 max. And then if they're doing their master's, or maybe they already claimed all 4 years, because not everyone finishes in 4 years their bachelor's, there's lifetime learning credit,
lifetime learning,
which could be up to another $2,000 added to your refund as well.
Nice, man. We got the earned income credit for $8,000. We got the child tax credit for $2,000 per child. We have the American Opportunity lifetime credits that could be $2,500, $2,000. Man, give me some more money, bro. What else do we got?
Another good credit that some people forget about is childcare.
Childcare.
Yeah. It used to be bigger during COVID, but I mean, you can still get, $600 to $1,200 for.
Remember COVID? People were getting $8,000 credits.
Correct.
Yeah. Man, they're really trying to get that people back to work, weren't they?
Yeah.
$8,000. But now it's only like $600, $1,200.
$600 for the first kid, up to $1,200 for 2 kids or more.
Before we go, Victor, can you please tell the audience what would be one thing that would be great for them to do to prepare for tax season? What's something you would tell them?
Got it. So first of all, make sure you have all your documents before you start preparing. Because yes, you're supposed to get your W-2s by the end of January, but some employers send it at the end of January, so you won't get your form till February.
Right.
Especially if you have stocks or investments, Robinhood, Webull, cryptocurrency.
Those always come late, don't
Correct.
they?
Usually about middle of February to end of February. And
I've seen them in March.
and then some people think they're going to get it mailed when you can easily download it, especially for my Uber drivers and my Lyft drivers. Just download it off the app.
Have a tip for Uber drivers and Lyft drivers, right? Download the annual statement instead of getting
Correct. Yes. So the annual summary.
The annual summary.
Yeah, because you'll have your tax forms 1099K, 1099 NEC, but the annual summary has the list of commissions and fees they charged you.
Has everything on there. All
plus the miles recorded.
Beautiful.
So really big expenses there to claim.
Get your tax forms. Don't forget the tax forms.
If you have a newborn, have the birth certificate copy ready, the Social Security copy ready.
Get all your documents.
Claim independent.
Get all your documents ready for the kids.
Correct.
Anything else to prep for tax season?
Depending on if you go with a professional, a preparer, most of them have to do what's called their due diligence. So have birth certificate, Social Security number, and proof of residence, meaning that the child lives with you.
And what is a proof of residence? What is that?
For most kids, medical records or school records that the kid lived with you for more than 6 months.
So something that has the kid's name on it on a piece of paper with your address on it.
Correct.
Perfect. Easy, simple. And anything else you want to wrap up to tell the audience?
And lastly, don't forget that you could possibly qualify for a head of household, even if you don't have a dependent.
So you heard it here. Even if you don't have a dependent with you, you could still possibly claim head of household, which puts a lot more money in your pocket. That's a little bonus tip from Victor over here. And thank you for being with us, guys. It was great having you on here. All this information is just golden for everyone out there. Get their documents ready. Get those credits. Make sure you answer the questions correctly. And, if you have any questions, please hit us up.